Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello, welcome to today's podcast. Thank you for coming back. Thank you for joining for the first time. Either way, doesn't matter. I appreciate the fact that you are here listening. And you know what else I appreciate? Your time. I mean, some of you might be sitting in a tractor with nothing else to do, but you're still listening. And I appreciate that very, very much because time is worth money. And if I can help educate you and I can make your time worth more, I am happy to do that. Please, if you are listening and when you get done, I would so much appreciate if you would leave a review because apparently iTunes likes those. But let's get right into today's conversation about the fact that money flows. And if you have read Nelson Nash's book, Becoming Your Own Banker, you will have heard this before. Money flows like water. That's how Nelson talks about it in his book. That we are all made up of water and that water flows through us, it goes out and it comes back in. And that it has to flow because the majority of our body is made up of water. Blood flows through our whole body, goes through our heart, comes back, flows through our body. I am not a medical person. I am not a nurse. I am not a doctor, but I do understand that blood must flow. And money flows as well. And when you read Nelson's book about water flowing, that is what he's talking about. The fact that money flows. And I think that we really need to understand this in very many different contexts. And so I just want you to picture one big pool of money in the world. There is not more than one pool of money. The central banking system is in control of our money supply. They have one big pool of money. Every single one of us has access to that pool. Okay? It just is what it is. I can go to the central bank. You can go to the central bank. Let's just pretend that there's no other little banks, that it's all just one big bank and all the money is there for all of us to utilize. We get to decide how much of that money we want. We get to decide how we're going to get access to that money. Maybe we're going to market grain differently. Maybe we're going to market our cattle. Maybe we're going to grow a different commodity that gives us more of that pool. But it's just a big pool. We all have access to it. It doesn't matter if we're buying a Ferrari or if we're buying a $600,000 combine or a tractor or a horse or a trailer. It absolutely doesn't matter what we're doing with that money. It all comes from the same place. And when we pay it back, it all goes into the same place. When we buy things, money flows in exchange for a good or product, whatever you want to call it. Okay? It's all there. I'm going to sidetrack just a little bit here because I talk about in my book, compartmentalizing of money. And a few podcasts ago, I did a podcast on Dave Ramsey and what I like about Dave Ramsey and what isn't so awesome about Dave Ramsey. And one of the things that Dave Ramsey tells you to do is compartmentalize your money. You have different envelopes, and I understand he's trying to get you financially to know where your money's at and financially stable. I get that. But as helpful as that might be, can it also be negative? And it can be because we're compartmentalizing our money. We're putting our money in envelopes. One envelope is marked gas. One envelope is marked eating out. One envelope is marked groceries. One for clothes. And so if I didn't buy that many clothes this month, then I can't use that money. But if I bought more groceries, I ran out of money, but I can't take from clothes to give to groceries, right? Because we're supposed to compartmentalize money. Well, really? Could you borrow the money from the clothes envelope to the eating envelope? If we just have one big budget every month, do you think that we could manage our money better? That's just like one big pool of money. That's just our pool in our household. That this money is coming into our pool and we can use it however we want. If I decide to go out more and buy less groceries, then that's what I decided. If I decided to have too many beers and now I don't have enough money for groceries, that's my own fault, right? But what we say is that this is the pool coming in, and so this is the pool I have to use from, which is great. You can only use from that pool or you're going to go negative. What we don't ask in a lot of cases is, how do I get access to the rest of the pool out in the big bad world of the central banks so that I can bring more money in? By not understanding that there's one big pool of money in the world, are we stopping our thought process and saying, okay, I can't have this because I can't afford it? Instead of saying, how do I get access to the rest of that money? What do I have to do to bring more of it in? People, I'm telling you, we're saying I can't afford it instead of how can I afford it? Ask the question correctly and your mind will give you the opportunity. Your brain will solve the problem. It might not happen right away, but guess what happens when we say I can't afford it? We just shut the gate on the pool. Just picture one big fence around the pool. And as soon as you say I can't afford it, gate shuts. Because your mind just said, I'm done. I'm done thinking about it. I can't have that new pickup. So I'm done. But what happens when you say, how do I get in there? How do I get access to more of that money? Well, let's see. Could I market something better? Could I sell something else? Could I have a job on the side? Could I resell something? Could I pay less for something? Right now we have all these ideas flowing. But by compartmentalizing money, by saying we don't have enough, that's exactly what happens. We don't have enough. So I want you just to think of this big pool with a fence around it. The gate's not locked. You can go in and play with all the rich people because there's a bunch of people in this pool. And guess there's not very many. There's only like 1% that's swimming in this big pool of money because those are the people that are wealthy. Those are the 1%ers. You can jump in there with them. You could play with them. You could find out what they're doing. Or do you think that the gate is locked and you can't go in? Or do you think that those people peed in the pool and you don't want to go in because they're not good people? It's infected. If you're wealthy, that money is infected and it's bad to be wealthy and it's sinful to be wealthy. Really? Is it? Because you could have a whole lot of money and do a whole lot of good with it. I don't know that anybody peed in the pool, guys. I don't think that they did. I think that we think they did. So think about the fact that we're compartmentalizing money. And I've had clients with different checking accounts. This savings account is for vacation. This savings account is for emergencies. And this savings account is for a new car. Really? Because what if you use the money for the emergency? What if you had it all in one? And you use the money for the emergency and paid it back, you were still able to go on vacation because you had the money back in savings. What if you had an emergency and you paid it back and you still had the money in savings to buy that car? Right? Because it doesn't matter if you can save $300 a month. It doesn't matter if it each goes to one account or if it goes to 3 different accounts. You still aren't going to be able to afford the car because you didn't put as much in the car account as you put in the emergency account. Or maybe you put the same in there, but it's not saved up in the same amount of time. You're not putting $300 into the car account. You're putting $100 into the car account. It's going to take you 3 times longer to save it. Does that make sense? I hope that makes sense. In my brain, that's making sense. So stop compartmentalizing money and think of it as one big pool. Money flows. It's flowing You just gave money to the guy you bought cows from. Now he's got that money and he's going to go buy something else with it. Money flows. There's another great book that Nelson gave me a couple of years ago, and it's called Economics in One Lesson. It is a bit of a hard read, but it's a good book. And it's a hard read because it was written in the early, I want to say like 1930 something or another. And so it's kind of hard just because the way they talked and wrote back then is not the way we talk and write today. And I am a slow reader anyway, so it just took me a little bit longer to read it. But it's a really small book. It's a great book. I'm sure you can get it on Amazon, Economics in One Lesson. And they talk about just the general food supply. They talk about workforce. There's one big pool of workforce in the world. There's one big pool of food in the world. And so if we take, let's just look at, we go to Walmart and we can be on the self-checkout, right? So a lot of people don't like the fact that we're at Walmart, we're in the self-checkout, and we just took away a job from somebody. Did we take away a job? Or did we give them an opportunity to start a business? Did we give them an opportunity to work at a different place? Is there a job that got lost at Walmart? Absolutely. Was there a job someplace else that they could have gotten? Yes. And you really have to read the book to make all the sense of this, because I'm not clearly going to re-illustrate the whole book. But is there going to be an effect on the income? Yes, there will be. But if we take somebody out of a job, we may give them an opportunity to be an entrepreneur and do something that they absolutely loved that they may not have been doing before. They may not have taken the risk to do that before. They may have got a better paying job. But there's just one big pool of jobs in the world. Do we need more of them in certain areas? Yes. Do we need to do things that we're good at to create more jobs here? Probably. Is it the same with the soybean issue that we're having now? And I've talked to many farmers about this because I'm not in your trenches. I'm not going to pretend to be in your trenches with this whole soybean thing. But there's so many mouths to feed and there's so many soybeans. If Argentina cannot grow soybeans at the rate that China needs them, we still are going to have to get rid of our soybeans or somebody is going to go without food. So how we get rid of them and how we sell them is going to change, and the price is obviously maybe going to change. But there's just one big pool of soybeans in the world, and there's one big pool of people that need to eat them, or animals that need to eat them. And what this book is saying as well is if the price of soybeans go down, does that force us to grow another commodity that we would have maybe not grown before? Let's just use hemp as an example because it's something that's really starting to emerge in the farming world. Now, are we going to be forced to try our hand at hemp where we used to grow soybeans? Is this going to turn out to be a good thing or a bad thing? I don't know. But we can't just sit back and say, I can't afford it, instead of how can I afford it? We can't sit back and say, soybeans are awful because we have this trade war. Instead, can we say, what can I grow instead because of the trade war? When Nelson created this concept years ago, but up until the 80s, you could put as much money into a life insurance policy as you wanted and it would grow income tax free. Then the mid-80s came along and the government created the modified endowment contract line. So now if you put too much money into life insurance, it's going to grow taxable. So we have to play with that line. So people said, you know what, this life insurance isn't a good option anymore. Instead of saying, how can I get around the line? We said, it's maybe not the best option. Well, guess what? Nelson said, just start 49 policies. Instead of saying, I can't do it, how can I do it? within the guidelines that I have, right? No different than these tax loopholes that everybody thinks farmers have. Really, it's not a loophole. It's just a tax code that you're taking advantage of. It's just a tax code that you know. How do I do that? How can I buy this tractor and write it off? How can I reduce my taxes? You're not saying I can't. You say every time the tax code changes, you say, how can I? It's essentially the same thing. So think about how money flows and the fact that you have access to it. Stop compartmentalizing it. Stop saying I can't do it. And think differently about it. Now, I know you might think this is just you're either going to like this episode or you're going to think this is BS. You can call my BS on it. I don't care. But if you're not thinking correctly, how are you going to solve those problems? With the same thought process that got you there? Probably not. Probably not. Just saying that's not going to happen. This is stuff that we have to talk about. This is a mind shift. This is the part of the infinite banking concept that is important. It's important why you have a certified practitioner helping you use this. Because if you're not thinking this way, how do we solve the problem? If I'm not there to help you through that, how do we solve the problem? People, I have to work on this myself. Because guess what? Sometimes I go, I can't afford that. I can't do that. I can't afford it. Instead of saying, how can I afford it? What can we do to make that affordable? I mean, I have had to train my brain to think that way. This is not something you just wake up one day and go, oh, well, of course I think like that. No, because the big bad world is very negative. It's a very scarcity mindset. Scarcity mindset meaning I can't. Abundance, how can I? There will be enough money. There will be enough. God will provide. That's not how most people think. There is a big pool of money, and I do have access to it, and nobody peed in the pool, and the gate's not locked, right? So if we can just switch our thought process a little bit and understand that it doesn't matter if you have one policy or 15 policies with the same amount of money, money flows. We don't need to have 15 policies, one for each thing. One for equipment, one for fertilizer, one for seed, one for chemical, one for feed, right? We don't need to have all those different policies. We just need one because what goes out comes back in. It flows. Okay, I hope that you liked that. I hope that that helped. I hope that the biggest thing that you took away besides money flows and that nobody peed in the pool, because I'm pretty sure you're not going to forget that, is to ask, how can I instead of I can't? How can I afford that? How can I do that instead of I can't do it? Let me tell you one quick story about I can't. I had no money when I wrote Farming Without the Bank. I didn't have any money because everybody believed it was too good to be true. Nobody believed that this concept worked. And if you haven't listened to my podcast before this one on how come I haven't heard about this and it's too good to be true, if you haven't listened to that podcast, please do. However, I didn't have any money. I didn't know how I was going to write my book because I needed money to write the book. I needed to pay the guy that put it together. I needed to pay people to edit it, right? I needed to pay a graphic designer to design the cover. I had no idea how I was going to do that. So I pre-sold the book before I had enough money to get the cover designed so I could pre-sell the book with a picture of the cover. And I used the pre-sale money to pay the guy to put the book together. I wrote it, but I had to pay somebody to create the file so I could send it over and have it printed. If I would have said I can't, none of you would be listening to this today. I wouldn't be changing the financial industry for farming. But I didn't say I can't. I just said, how can I do this? How can I get the money to do this? Because I was out of money. I mean, there's always credit cards, right? And I could have used them some more, but I had already used them all. And I didn't want any more. So we have to get creative. I've been there. I know. I get it. I haven't been fed money. Mommy and Daddy didn't take care of me either. I've created what I have. So I might not have $1 million of debt, but I've been there. I've had the debt. We just have to change the mindset around it. And remember that money flows, and you don't have to have a bunch of policies. Okay, I'm done beating that like a dead horse, as my husband would say. Please, if you liked this, let me know. If you didn't like it, let me know. I am totally okay with constructive criticism. Even if you yell at me, whatever, I don't care. Doesn't matter. It takes a lot to hurt my feelings. Please rate the show. I would very much appreciate that. And I thank you for listening today. If you want to hear something, let me know. MaryJo@withoutthebank.com. If you've not gotten the book yet, or you've not read Nelson's book that I talked about in today's episode, go to farmingwithoutthebank.com and you can get it there. Thank you so much. I very much appreciate you. Have a good one.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.